November 1999, the three presidents of Kenya, Uganda, and Tanzania inside Arusha Stadium formally launched the current guise of the East African community as we know it. Well, I should know about that. I was inside that football stadium, and the result over the years has certainly been one of the better plays at economic integration on the African continent. And what is it that we talk when we talk about the East African community? We're talking about 144 million people. Combined GDP from the last figures that I saw on the EAC website, we're talking $110 billion. And in terms of the landmass of the area that we're talking about, it's 1.9 million square kilometers, including, of course, Africa's highest point. So how far have they come? And what more remains to be done? For the discussion, let me introduce my guest for this. I've got the Regional Integration Advisor in the Ministry of East African Community in Rwanda. His name is Leonard Mungarulire. And also joining us is Antonio Pedro. He's the Country Director for the United Nations Economic Commission for Africa. And in Nairobi, Kenya, we have Kwame Owino, CEO, Institute of Economic Affairs. Gentlemen, thank you for joining us today. I want to start with the government voice. I want to start with you, Leonard. I have outlined some of the number of things that you guys have achieved, and I've got a whole list here of the other key achievements that have been done over the years. So, in terms of the original target of the leaders when they were in that stadium in 1999, how far have we come, and what remains to be done?
Thank you, and thank you to CNBC for having me and having my fellow panelists. I think your introduction speaks volumes. Rwanda applied to join the EAC in 1996, and we were formally accepted in 1999, but formally acceded July 1st, 2000. Now, Rwanda's priorities, Rwanda's desire to integrate and be connected with the rest of the region and the world is actually enshrined in Rwanda's long-term vision, Vision 2020. It's enshrined in our medium-term strategy, economic development, poverty reduction strategy 2. And in the Vision 2020, Pillar 6 actually stipulates that Rwanda desires to be connected to the region and international global markets. And so fast forward 2015, since we formally acceded, what have we achieved? I would cite a number of achievements. And I would start perhaps with the pillar, customs union.
Right.
Under that, we have witnessed change in the way trading across borders is conducted. For instance, since the introduction of the single customs territory in January 2014, we have seen the reduction in cost of trading across borders. For a 20-foot container, the cost has significantly dropped from $5,200 US to $4,200. And the number of days in terms of trading across borders from the port of Mombasa in Kenya to Kigali has dramatically reduced from 21 days to 5 days.
Right.
Now, these are huge cost savings to the businessman, to the small medium enterprise. The question remains in terms of what has to be done moving forward, or what remains to be done is translate these gains into benefits for the ordinary citizen. When we go to the supermarkets, has the reduction in overall cost of trading across borders translated into lower costs? So we are having conversations with all the stakeholders to see how this can happen.
Absolutely. Thanks for that.
Leonard,
let me come to you.
Sorry, George, let me pick on this particular issue that Leonard read. And once again, thank you very much for the opportunity to speak to you and to CNBC.
Sure.
On the matter of the trade compatibility between our member states, I think this is one of the reasons why, to date, the level of intra-African trade, it is still low. It's because most of our countries have similar comparative advantage.
Right.
And the level of the diversification of our economies is still relatively small.
Right.
Therefore, the opportunities to
It's easier to integrate.
No, the opportunities to trade between us are relatively small. because we all produce the same products.
I see what you mean.
And therefore, moving forward, and one of the most important things that we have to pursue as a region is to diversify our economies, intensify the value addition, so that indeed we start to trade more on manufactured products.
Right.
And that is a very important part of the agenda, I'm sure.
So you actually begin to work like a united economy and plan and do different things and strengthen and ask the countries to work where they are strongest at. Let's go to Nairobi and speak to Kwame. Kwame, you listened to the conversation. You heard the outline in terms of the progress that has been made over the years and also the intervention that came from Pedro. From your side, when you look at with an independent look and you're looking at the whole region, what do you see as some of the key issues that have been achieved, and also what are the key issues that now must be addressed?
Well, I think if you compare as a regional economic bloc, East African community to the rest of the continent specifically, I think the East African community has gone the farthest, both in terms of intent, but also in terms of what has been formally achieved. There's more cross-border trade between Kenya, Uganda, Tanzania, obviously Rwanda and Burundi as well. There's some more to go. I'm not too sure that the East African community should go all the way to a monetary currency, to a monetary union in terms of a single currency, but I think there's a lot of scope for a customs union and to establish the free trade area much more quickly than is anticipated. So there's progress. There's free travel, of course, visa-free free travel across the East African community, which is a good thing. And obviously Rwanda and Kenya have gone one step further and allowed their citizens to actually travel and also to settle. So obviously the other things that need to be made are questions about the ability of citizens to cross, which is already there, but also to cross and to settle and do business in the other areas of the EAC. So in that there's more movement to be made forward. Yeah.
Now, when I was looking up research on this, I came across a saying that I want to share with some of you about the reasons for that the countries advanced when they were trying to integrate. The perception has been built over the years, and I'm saying this lightly, and I don't want to be bad from Kenya, Tanzania, or Uganda when I visit. But the suggestion seems to be that the Kenyans want to export surplus capital, the Ugandans want to supply also surplus labor, while the Tanzanians are looking for a voice in which to set their Pan-Africanism. Now, I think I say that in jest, but when you look at the willingness of the partners to come together, do you see commitment from the key members that started this whole idea being at equal levels? The suggestion has been that Tanzania has not been a strong participant as it ought to be.
Are you asking me? Okay, fine, this is Kwame, so I'll respond quickly. I think first is it's not, because part of it is these are decisions that are made by at the political level. So of course there are crises here and there and there are difficulties. But on the whole, I look at everything positively. I think Kenya, Uganda, just a couple of days back had another discourse, of course, between their presidents. And I think some of the things they discussed will be brought to the summit when they next meet, which is an annual meeting of all the heads of state. In general, the East African community is stronger than it was a year ago and a year before that. That's a good thing. There's also the common development of infrastructure all the way. There's a railway line that's being developed, a pipeline that's being developed partly as part of the East African linkage. So I think it's a good one. And as East Africa considers an expansion into COMESA, because many of the members are also members of COMESA, and of course they were the tripartite, which is basically across the entire continent. I think East Africa will be the leader in many ways, because what has worked in East Africa will probably be a good example for the others. There are crises, yes. I think most of us are still very nervous about foreigners coming, because all of the 3 countries have problems with employment. The 5 countries have problems with employment. But we'll learn to build confidence with each other, and over time, I think they'll be solved.
We, of course, have problems in each of our countries. Let's tackle this issue of political commitment. The larger political commitment, I think, has been expressed in the formation of the East African community and the commitment of the leaders. But in terms of implementing some of the more contentious aspects of the requirements, how far are we, do you think? Let me start with you, and then we'll come to Pedro.
Thank you for the question. I want to pick up on Pedro and Kwame's earlier points.
Yeah.
See, the EAC Treaty sets out very basic fundamentals upon which we as partner states should relate and connect with each other.
Yeah.
And one of the basic tenets is shared destiny, common prosperity, really underpinning citizens at the basic principle. And so, is this being translated into reality and action? My sense is yes. The EAC as a regional bloc, as Kwame pointed out, has made strides. I mean, we're now increasingly trading with each other. Yes, we have a long way to go, because when you look at intra-African trade, it's about 12%.
Yes.
In ASEAN, it's about 30% plus. In the EU, it's over 60% plus.
Yeah.
We're increasingly pushing that trade, and it's as a result of increased push and commitment by our political leaders. With the EAC, again, the variable geometry allows for willing countries within the EAC that want to advance, want to accelerate implementation, that want to move fast, because time cannot wait for us. We need to move fast. Citizens are looking at us in terms of benefits, in terms of prosperity, jobs. And so that provision in the EAC treaty allowed for President Uhuru Kenyatta, President Museveni, and President Kagame to come together and say, look, let's select key projects within the EAC that we've been talking about for a while now, and let's put in place a mechanism that will accelerate the implementation.
Right.
Fast forward 2 years later, in June 2015, we were in Kampala during the 10th Northern Corridor Integration Projects Summit, and we were taking stock of achievements over the past 2 years. And we are seeing a lot of abundant political will. To quote President Kagame a few months ago, he said, political will has momentum in itself. So we need to seize it and run with it.
Absolutely.
And so what we are seeing now is, technocrats and our private sector increasingly coming in and saying, look, this is what we can do. We want to partner with you. We want to implement the infrastructure projects that Kwame mentioned. We want to create wealth. We want to create prosperity. And we want to be change agents in this larger market.
Okay.
Thank you.
Well, again, I want to follow up on what he said, because very often the conversations on regional integration are about mobilizing resources, money, to implement projects and infrastructure projects and so on and so forth. Whilst a lot can be done if the leadership acts on the decisions that they have taken.
Are you seeing it?
Yes, indeed. As Leonard was saying, the impetus that the leadership of Kenya, Rwanda, and Uganda have introduced in the Northern Corridor is a clear example of what can be achieved when we act on our decisions. So regional integration is a responsibility of everybody, including, of course, the member states. Even though we have secretariats, I mean, in Arusha we have EAC secretariats, but the member states have the ultimate responsibility in implementing the decisions, in ratifying the protocols that they sign, and so on and so forth. So I would like, therefore, to underscore the importance of political will of leadership in pushing the regional integration agenda. And just one additional aspect that on this variable, the importance of the variable geometry, which is a key concept in the regional integration discourse. It's that indeed any regional space requires growth poles to provide necessary dynamics for the regional integration process to accelerate. If you look, for example, to the European Union, I think you'd agree with me that France and Germany, they serve as the essential anchor of the regional integration.
The two-speed Europe approach.
Exactly. So it is therefore important that we admit in a conversation of the regional integration processes that some will take the leadership. That is required in all of the regional economic communities, the recognized one, the 8 regional economic communities.
I want to challenge that precept, though. I want to challenge it on the basis of And we'll come back and we'll talk about the different lessons that we're learning out of Europe, with the Brits now saying, maybe let us pull out, and the Greeks, of course, and their problems. But I want to challenge this idea that we should allow others to come in at a speed that is acceptable to them. Because now I'm looking back as an African historian, and I'm thinking, come on, man, what are we doing, guys? We are defending borders that were drawn up by one dead European in the name of Otto von Bismarck in 1884. And now we are defending these boundaries and dragging our feet when we should be moving full speed ahead at an opportunity that unites us for the first time in centuries. Why should we allow Tanzania and Burundi, and I'm naming them, to slow down the process instead of running with the others?
Well, I think, again, the Balkanization of Africa has been recognized as one of the impediments to the acceleration of regional integration. That's why you would remember that there was a discussion of establishing the United States of Africa as an effort to try and address some of those concerns.
I was going to say, God bless Gaddafi, but I won't.
However, it is important to recognize some of the realities and have therefore realistic pathways. And as we were discussing earlier, people integrate. Governments do not integrate.
They do.
Yes. So therefore, if we facilitate the physical movement of our people, if transaction goods and services can freely move in regional spaces, those boundaries will become redundant in the sense that you would have factor flows happening in your regional space. You'll be seeing transactions happening irrespective of the boundaries.
That's true. And I want us to come back and look at the evidence on the ground in terms of the numbers that you guys have seen since coming in, bringing in the common market in 2010. Kwame, from your side, when you look and you hear the conversation that we're having here about the, shall we call it the twin approach, if you like, or allowing those who want to integrate slowly, allow those who want to integrate faster, move ahead. Does it make sense to you, and does it work, though, when you look at the need to integrate Africa that has been enunciated by the African leaders themselves at fora, including that of the AU?
Yes, it makes sense. I mean, variable geometry makes sense. Part of the reason being that while you say that, and correctly, that Africa's borders as they exist today for most of the countries was actually defined by a colonial experience and history, nationalism in this continent is very strong. Talking about whether it's Kenya, Uganda, Tanzania, and all those other things. So part of it is that politicians have to take with them a constituency of politically active people who see some danger or for some reason would like to hesitate about the pace. But the way to solve it is, variable geometry makes sense, but the way to solve it is actually to establish benchmarks and talk about specific deadlines or timelines, but those who wish to go faster, I think should do that. Talking of which, my view would be a country such as Kenya, which would like to be a leader, in my view, could inspire confidence, whether in Tanzania or Rwanda or Burundi or the other countries that may have concerns that are genuine about the pace of integration, by simply opening itself up and declaring a free trade position to all the countries within the EAC. If Kenya did that, I can tell you that everything else would proceed much, much faster than it would be, because whether it's the default leader or not is one thing, but I think it needs to show confidence. And some of the concerns that come from these countries are actually on account of Kenya's behavior or what is perceived as Kenya's interest in the EAC.
I want to pick up on a point you made about the fact that it's people, that the leaders can talk at the national level about integrating, but it's actually the people who make it happen. Let's look at the evidence. Since 2010, when we had the common market where so you had the ability to be able to move goods, you had the ability to be able, labor was able to move across borders. What have we seen in terms of evidence on the ground? Have people taken up the opportunities created by integration?
Thank you for the question. The Common Market Protocol basically provides for 4 freedoms, factors of production including people, meaning labor, goods, services, and capital. And since 2010, and the deadline is fast approaching, by end 2015, EAC as a bloc should have fully implemented the provisions in the Common Market Protocol.
Even allowing for the variable speeds.
Absolutely. But so I like what Kwame said earlier about timelines and deadlines and milestones. Through the Northern Corridor Integration Project Summit, that's exactly what we've introduced. That's what the heads of state have introduced. What it means is a sense of urgency, results-oriented type leadership, accountability, and results that make an impact to citizens. And what are these results? With the free movement of labor, since the introduction of IDs, which Kwame alluded to earlier, between the partner states, Uganda, Kenya, and Rwanda, we've seen an increment in usage of IDs. Since January 2014 to December 2014, about 1.2 million citizens in Rwanda, Kenya, and Uganda have been using IDs and voter IDs for those countries that don't have IDs. The idea is other partner states, including United Republic of Tanzania and Burundi, will come on board. Okay. With the free movement of services, let me use the example of telcos, ICT. Yes. For a long time, whenever one would travel to either Nairobi or Kampala, roaming charges were exorbitant. I know about it. I move in Southern Africa and I'm charged, I don't know, 10 times what I pay in Zambia and Zim, what I pay in South Africa is like a tenth of that. So since the launch of the One Network area, as a result of heads of state coming together and demanding results, from October 2014 to end 2015, Uganda joined January 2015, we've seen a dramatic reduction in cost of roaming charges of about 30%. Wow. It used to cost about $0.3 per call when you're roaming. It's now been reduced to about 0.118. Wow. And that's a dramatic savings in terms of savings to the businessman, the small medium enterprise, the cross-border trader between here and Uganda, who has saved in terms of transactions. In terms of free movement of capital, we have seen increased investments from Kenya, from Uganda, from Tanzania. Kenya is the leading investor in Rwanda to the tune of about $430 million over a period of 10 years, and up to 2014. And they have created over 4,000 jobs. I mean, Kenyan brands are a household brand in most homes here in Rwanda. Sure. And you have Uchumi, you have Nakumat, you have KCB, you have Equity Bank, you have Serena, you have Fusion Capital, just to name a few. And these brands are also cross-listed. Some of these brands, like KCB, are cross-listed on the capital market. So to your point about political leadership, we're starting to see tangible results that really have an impact to citizens, to you and I. Yes.
Could they be doing better?
Of course, I mean, it is, the sky is the limit. And earlier there was a reference to the tripartite between the East African community, SADC, and COMESA. So, and there's a free trade area that has been just inaugurated a couple of months ago. Exactly. So that would create a much larger market, more than 500 million people, with a much larger GDP. And with my office run a simulation, general equilibrium model, utilizing GTAP model, and it the numbers suggest that the removal of tariffs in the free trade area would create a 30% increase of trade exports, intra-African trade, between these countries. So, and that is part of the, we discussed earlier that it's important to carry our stakeholders in a conversation on regional integration. So mainstreaming regional integration is not only about making our citizens aware of the rules and regulations and the protocols, but also about the potential. So that then the businessmen and people, ordinary citizens in these spaces, recognize that it is not a zero-sum game, that there are opportunities that can be seized. For example, we were saying that one of the problems between, potential problems between Kenya and Tanzania arises of the fact because, I mean, in Tanzania, they may be thinking that regional integration is not beneficial. So the trade creation and trade diversion argument. But if you look at the numbers, and I'm not good at numbers, so don't ask me the numbers. Perhaps Kwame can step in here.
We want to go to Kwame because I also want him to look at who is taking advantage of this environment. But
yes, but since the establishment of the new East African community, the trade between Kenya and Tanzania has increased significantly.
Right.
And Tanzania is the largest, I mean, trading partner of Kenya, by the way. So this is very important to know. Despite all of the misgivings about the perils of regional integration, so demonstrating the business value and the value proposition of regional integration is part of and parcel of the efforts to mainstream regional integration. So in that respect, on mainstream regional integration, I'd like to salute the efforts here of the government of Rwanda, because they were the first one in the region, the EAC region, to establish a regional integration policy arising out of the consultations on mainstream regional integration.
They are enthusiastic participants.
Yes.
Kwame,
they are leaders. They are not participants. They are leaders in the
They are
process.
leaders within the space. Exactly. I like that. Kwame, do we see evidence of balanced take-up in terms of the opportunities between the partners? So, are we seeing companies in Rwanda, Tanzania, Burundi, Uganda, Kenya, equally taking advantage of the integration dividend that's been put on the table for them?
Yes, I think, well, there are very some, especially Kenyan companies that have a high profile in Rwanda, as I've been told, and also have some in Uganda. But equally, there are individual companies as well who have, from Tanzania, even from Uganda, that have that have brought in, or individual traders, for instance, that actually bring in. So, for instance, Kenya is dependent on Uganda and Tanzanian maize in some parts of the region, partly because of the deficit, and increasingly, some sugar as well comes from the region as well into Kenya, and of course, it's quite competitive. So there's space for that. At the same time as well, because investments move from one country to the other, and of course because of the cross-listing as well, that means that some of these companies are not necessarily, they may look Kenyan because of their situation, but obviously because of common investments or the ability to buy into them. So they're actually East African companies, are not necessarily Kenyan companies. I'll speak about the big beer company in Kenya. Obviously they are Tanzanian and Uganda shareholders as well. And also the Kenyan companies that are listed on the stock exchange, I mean, including Safaricom, there are certain members. There are certain investors from across the country that have here. I'll then speak about the railway, the Rift Valley Railways, which is in charge or has a concession to manage the East African line from Mombasa all the way to Kampala and beyond. And some of the investments are actually Ugandan investments matching. Because the Kenyan government doesn't own much of it, actually. The Kenyan company that was there sold off, and it's a Ugandan establishment that is there. So yes, there's that cross. And I think if we search more carefully, we'll find that the opportunities have been open. Some have higher profile, certainly, but obviously the opportunities have been opened evenly.
Absolutely. And of course, we'll take advantage of these opportunities at different rates. We need to take a break. When we come back, I want us to talk about that agenda that remains. But I also want us to look at perhaps the key lessons that we should be taking out of Europe as Europe grapples with Greece, which has struggled to try to keep pace and maybe lends a little bit of support to my argument that bulldoze everybody to move at the same speed. If you've got laggards, throw them out. Maybe you don't agree with me. But come back after the break and we'll be taking up those issues. Welcome back. You're watching a special debate on regional integration. In particular, we are focusing on the East African community, which I think to date has perhaps been one of the more successful models in terms of what Africa can do in regional integration. Before we took the break, we wanted to said we wanted to talk about perhaps the lessons that Africa and East Africa can learn from the European experiment, which of course has advanced far quicker than what we've been able to achieve here on the African continent. If I am not mistaken, I think the East African community is modeled on the European Union experiment. Let me introduce my guests again. I've got Leonard Mungarulire. I'm hoping I got that right. Yes, he's Regional Integration Advisor, Minister of East African Community in Rwanda. Antonio Pedro, Country Director, United Nations Economic Commission for Africa. And in Nairobi, we've got Kwame Owino, CEO, Institute of Economic Affairs, Kenya. Let me come to you. I saw both hands raised before we took the break. Right. But let me start with you, and then we come to you, Pedro. Very quickly, what lessons do we draw from Europe as we integrate? Because the other issues we're talking about are teething problems and part and parcel, if you like, of integrating.
Thank you for the question. I think the European Union has so many lessons to offer to the East African community, and I think we can draw so many from the EU. Pedro earlier alluded to the fact that a few countries stood out and provided the leadership required to drive the EU agenda, Germany and France. And I think we're starting to see a lot of that happening within the ESC context. Yeah. But certainly for the ESC,
you're being modest, because he said Rwanda is the leader in terms of driving that process forward.
I want to believe it's a joint effort. Yes.
You're a diplomat.
But the ESC also is a community, is a block of 5 unique countries with different histories, but with a common agenda. Yeah. And so with that context, there's some things we can work with and draw lessons from the EU, yeah. And we need to move at different stages. Yeah. But the EU being a block of advanced countries, advanced economies, yeah. Certainly offers us examples of how integration is important and how it's an important tool for we as EAC citizens to emulate. Yeah. And let me just pick an example. The Schengen area allows for any non-Schengen or non-EU citizen to travel with just one Schengen visa, yeah. That allows you to move from all the Schengen member countries, yes. Very easily. And so, drawing from that example, yeah. The EAC had for some time wanted to implement an East African tourist visa. Yeah. So through the Northern Corridor Integration Project Summit, the visa was finally introduced, right. In 2014. Right. By end of 2014, about 2,000 East African tourist visas have been granted only by Rwanda. I imagine Kenya and Uganda have other statistics. Sure. But what does that mean? It means the tourists from outside the EAC bloc, the 3 countries, yeah. Uganda, Kenya, Tanzania, at a fee of $100, can pay for a visa, yeah. And use it to traverse in the region. The visa is multiple over, yeah. A period of, I think, 3 months. I may be mistaken. Sure. But that allows for increased tourist attractions in terms of the visitor moving from Uganda, Kenya, absolutely. Easily, multiple times. Yeah. It also means savings in terms of airline movement, yeah. Because the tourist can actually use Kenya Airways, or can use Rwandair, yeah. That can connect the tourists from Mombasa to Kampala, from Entebbe to Kigali, yeah. Yeah. And with the one airspace area that we're negotiating, with the 5th freedoms we're negotiating, it's, yeah. Increasingly cheaper, yeah. For us to travel to Entebbe, to Nairobi, to, yeah. Juba, yeah. And this is just the beginning. Imagine what we will do with this momentum that our leaders have set out.
Absolutely. And I think it's important to make the point that, yes. The politicians can spell out their visions, yes. But there are other technical issues that we need to be careful about.
Yes. Yeah, I think the elephant in the room here, with respect to the Greece issue, is, yeah. Whether we should pursue and establish the monetary union, yeah. Today, or be a little agenda. Yes, or be a little bit more patient. I think one important principle that I think everybody would agree with is that context matters, and there is no size that fits all. So we can't therefore transfer the European Union model
Sure.
to East African community in its
wholesale.
Exactly. So it's important to understand the political imperatives, the incentives, and the overall dynamics in the region before we try to emulate any practice. And with respect to the monetary union, for example, there are obvious advantages in having a single currency. I mean, it reduces, after all, the transaction costs. It facilitates financial integration and so on and so forth. But to achieve that, there are certain criteria, the macroeconomic convergence criteria, and all of that already has been in discussion. But it's important that the harmonization of the economies is strengthened to provide the necessary foundations for you to have a stable monetary space. So, and before you achieve those, the basics, is therefore important to perhaps delay the process. So, and the other important lesson from from Europe is the conversation about the need on all the absence of the need to have a supranational authority. So who would ensure that the macroeconomic convergence criteria is observed and the deviations are not tolerated, or if tolerated, are within the margins that have been
and they are managed,
are managed accordingly. Is there appetite for supranational authority in the region?
I'm going to come back and ask you, all of you. I'm going to come back and ask all of you, because Kwame, I think the suggestion that perhaps the Europeans didn't think too carefully, or if they did, that they didn't think it was a big risk enough to work on macroeconomic convergence, is an important lesson for East Africa as well, especially given the different development states of the countries that we're talking about.
Certainly. I think my view would be a lot of things are going right for the EAC, and I think for a whole generation they probably will not get it wrong, but if they make the mistake of a monetary union at this time, I think the disaster will unfold much quicker than what we've seen in Greece. One being that if you just look at, looking at the macroeconomic convergence criteria, looking at Kenya's debt position and the different ones across the region, these economies at that macro level are completely different. So if we pursue a more modest opening agenda for trade and to facilitate financial transactions, yes. So far, in each of the other countries in which we, I think there's the argument about transaction costs and therefore a common currency, a justification for a common currency. In each of these countries, more often than not, you're able to actually convert currencies very easily. So yes, there might be a transaction cost, which might look like it's big, but actually in our calculation, it's not that much, because otherwise you would have forestalled trade. The risk that we assume by having a monetary union is much, much bigger than what that transaction cost is. So far, I think the question of a monetary union should not just even be, we should not be hesitant about it. We should park it in the back burner, in my view, for at least another 20 years.
Now, that's an important point, because we were discussing earlier with Leonard, and we were talking about the fact that by 2024, all these are supposed to have been achieved, including fiscal and monetary and currency union. Do you think there's time enough? But you have already answered the question, right?
my view is that completing a customs union, a free trade area. Of course, we may also have to work on some immigration policy. I think it's a problem in Europe as well. That's something that we need to. Who can come into Rwanda, for instance, and who can come into Kenya, and to what extent are we able to allow people to work here when they come from outside the region? But also, I think, looking at the tripartite agreement, it will be complicated if we have a monetary union, because then how do we harmonize and converge with the rest of the African continent? My view is a monetary union, and specifically a single currency, is not a priority for the EAC.
Absolutely, and I'm not even talking about the fact that Burundi is in turmoil right now. So to even begin to talk about whether they are going to be able to attain all these other targets is a difficult question. Can I ask a difficult question?
Sure, I wanted to...
You want to respond to him? Please,
respond.
Go for it.
I think for the monetary union to work, we need to have the fundamentals in place. We need to have a strong foundation. And I agree with what Kwame said. We need a fully fledged customs union working, a single customs territory working within the EAC. not just Central Corridor and Northern Corridor, but the EAC, with less bureaucracy, with less stopovers, with seamless trade and flow of goods and services. We need a common market that has been fully implemented. But the good news for the monetary union is we have, if you will, about 9 years or so. The deadline, the roadmap up 2024 allows us to take the baby steps and learn from Greece's experience, from Spain, from other EU countries, and the trials and tribulations they've had to go through and endure, and the lessons they've had to, painful lessons they've had to learn. And so beginning September,
€240 billion later.
Exactly.
Now about another 86 billion euros.
Exactly. Beginning September this year, the EAC member countries are coming together to start negotiating some of the instruments and the protocols. For example, one of the protocols is the East African Monetary Institute, to really study the monetary policies of the EAC. The East African Bureau of Statistics, the East African Financial Services Commission. All these are being studied, and there has to be a careful study about how it's going to work, how it's going to be implemented, the laws, the harmonization, the policies. And so we have a timeline within which we're going to negotiate this, but also put in place safeguard mechanisms to sort of cushion us from such crises.
Absolutely. I've got so many questions that I want to ask, and I want to go back to Kwame in Nairobi. I'll come to you. Do you want to add to
yes, no. I mean, this is a dimension which
you raised the issue of the supranational institutions that need to be built.
Exactly. But no, now it's a completely different issue. It's about, our conversation today has been essentially about physical integration and economic integration, which is market access, trade, and so on and so forth. One important area that we are now starting to emphasize is the need to also, for lack of a better word, mainstream social cohesion into the regional integration agenda.
Is that difficult?
Yes, it is very difficult. Kwame earlier made reference to the need to have a migration policy. I don't know what this word is. Leonard who mentioned that. That's one of many of the dimensions of the social cohesion. I mean, the extent to which we have pockets of poverty and so on. Again, that's another issue. So, and it's in the European Union, they have a solidarity fund of some sort to address those issues. So, essentially, what we are arguing is that whilst we recognize the importance of physical and economic integration, those are fundamentals for us to achieve greater integration, it's equally important to start looking at the social aspects of it, because they can be a dormant cause for greater conflicts, and that would therefore make all the investments on infrastructure, on all of, in market access, completely redundant.
Absolutely.
So this is a very important message which I thought I should convey.
I agree with you.
I would like to just delve a little bit deeper into the social cohesion and unpack a few things about what the government of Rwanda, through the Ministry of East African Community and development partners such as Trademark East Africa, are doing. Specifically with regard to targeting border communities and women in cross-border trade. Communities and people at the grassroots, taking integration agenda to the people at the margins there, and empowering them with the tools and the mindset and the skills and the resources and education about their rights, about what integration means. It's about awareness, it's about sensitization, it's about communication, and it's about bringing communities that border each other. You know, we border Congo to the west, we border Uganda, Tanzania, and Burundi, but bringing those communities together to basically undertake joint activities. It could be cultural, social activities, exactly what Pedro is saying, so that the integration agenda can increasingly start to mean something to them. And
so you have started?
Yes, we're starting to do that, and it's bearing results.
I want an answer to another question that I want to ask before I go to Kwame in Nairobi. the issue I wanted to ask is, Kwame raised the issue of perhaps implementing the customs union first fully before advancing on the other aspects that are more complicated and require a lot more work, including the supranational institutions that we've been talking about. In terms of customs integration, what progress have we made? How far are we? And I'm hoping you can give me a number that says 75%, 80% or something like that. I like numbers. They protect me.
Okay, with the customs union that really allows for free movement of trade of goods
and people.
We have introduced several initiatives. So for example, we have one-stop border posts. These are hard infrastructure at our borders. We have one in Rusumo, we have one border with Tanzania, we have one in Nemba, in a border with Uganda.
Yeah.
And these one-stop border posts basically bring the immigration officials, trade officials, RRA officials at one facility.
Right.
And increasingly these facilities are leveraging ICT to basically ensure that there is swift clearance of cargo and ensuring that payments are done efficiently and people as well.
Yeah.
And so that's one initiative. And that has dramatically reduced number of days that trucks have to spend
or people just crossing the borders to visit family and friends.
Precisely,
okay.
Precisely. We have the electronic single window that has been implemented in Kenya, in Uganda, in Tanzania, in Rwanda.
Yeah.
This is basically a facility that allows for traders to log in and swiftly clear their cargo and interface electronically with the revenue authorities.
Absolutely.
And that has saved traders up to the tune, if I check, a reduced number of days to now 3 days in terms of clearing procedures, and also saved cost to the tune of 30%.
Right.
So it's increasingly bearing results, and there's a push for more.
Yeah, the work has started. I can tell you, I know the difference between having 2 border posts and 1 border post. I come from Zimbabwe, and I know the pain that you go through a border. I've spent 24 hours at Bind Bridge. Kwame, let me come to you. I asked him if he could give me a percentage in terms of the progression of implementing the customs union. Have you guys done some numbers around that and seen how far they are? And can you estimate how far they are and therefore the amount of time that will be required to complete the journey before we dabble into monetary, fiscal, and the other unions?
No, we haven't had a calculation that could tell you how much it would be, but actually the World Bank last year launched, or rather published a report which was talking about an assessment, the IFC, an assessment of the state of implementation of the Common Market Protocol. And their view was that I think we are just slightly above half of that. So there's a lot of work left to be done. Though of course it was by country and obviously a common score. So obviously there's quite a bit of work to be done. So I don't have a single number for you, I'm sorry about that. But yes, going now to what needs to, I think that it's a bit disappointing that the common market, the protocol, which was very clear and which everybody adopted, and the customs union obviously, has not gone as quickly as it is. And some of it is political reasons and some of it is just basically bureaucracy. And I think that is something we need to resolve very, very quickly, because the big agenda for the ESC is not just even the monetary union. In my view, the big agenda is to actually consider northwards whether South Sudan, which has applied, and Ethiopia, which is showing overtures, could actually be integrated in here as well. And it will be very, very difficult for us if we've delayed for 5 countries and then to try and integrate a few more before this is settled. So my view is that it's mostly creases here and there, some bureaucratic, some are real and genuine, but I think we should build that confidence with each other and get it to go forward.
I'll come back to you and ask you about how ready these guys are in terms of trying to create supranational institutions. And the other question that I have actually is whether there's need to expand the federation, as it were. I can see that question is actually going to become redundant. But Pedro, you wanted to come in?
Yeah, I was just going to say that you said you like numbers.
I do.
I think this is very important in terms of understanding the pace of the Regional Integration Index. The African Development Bank, the African Union Commission, and my own institution, the United Nations Economic Commission for Africa, has now launched the Regional Integration Index.
Right. Yes, I remember it.
Which will provide answers, quantitative answers, let's put it that way, on the state of regional integration. And our next flagship report on regional integration assessing regional integration in Africa is going to be launched in October.
Okay.
So at that time,
are we invited?
You will certainly be invited, and I think that will be an opportunity for us to have a much more, I'd say, how do you call it, number-driven conversation about the state of regional integration.
And then we actually see the evidence on the ground.
Yes. And I know that we are getting close to the end of our interview.
Indeed.
There's another point which I think is very important for us to discuss, is financing regional integration. Well, there are exceptions, of course, but unfortunately, to date, our regional integration agenda is financed from abroad.
And it's very unfortunate.
And that is a serious issue.
It determines the speed.
Exactly. And it can also lock us into geopolitics. And and because, this is a complicated game, as it were, especially when you are pursuing, for example, the trade agenda. So there are all sorts of vested interests in there. So I think the argument for getting ourselves independent or reduce our level of dependence from foreign support in our regional integration is strong enough.
Why are we unable to finance our own integration?
Well, I think there was a summit, the EU summit, that discussed several options. And I think now their decisions were taken with the view to indeed addressing this issue. Some of it look at the possibilities of utilizing part of, a percentage of what we pay in our tickets and so on and so forth. ECOWAS has
tax Africans, you are saying?
Well, in any case, we're traveling, and we are traveling in big numbers. So there's an opportunity that utilize that to fast track some of our regional integration agendas. The Trans-African Highway, we have some missing links there that need to be completed. There are all sorts of very important issues that the continent should not be dependent on on others to implement it. So I thought that.
Did you want to contribute to that? Because I need to get to
I think he raised a very important point about financing the EAC integration agenda. In November 2014, the EAC heads of state launched an EAC infrastructure plan that requires financing to the tune of $100 billion. That's a staggering amount. And infrastructure to basically, take care of roads, the superhighways, take care of energy, energy pools with the region, take care of oil refineries, take care of oil pipelines, just to mention a few. But increasingly what we're seeing, especially through the Northern Corridor Integration Project Summit, is private sector coming on board and saying, look,
so the resources,
let's partner together.
Got them.
Let's partner together. And the private sector from Kenya, Uganda, Rwanda is saying, let's partner together because we can tap into pools of savings. We have capital we can tap into. We can leverage our own resources to borrow from regional and international sources to finance these projects. Let's not leave it to government. And increasingly government is saying, let's look to the private sector.
So the thinking has started.
Within the EAC. And the private sector within the EAC is actually increasingly driving this agenda and saying, let's be part and parcel of this process.
So innovative sources of financing domestic resource mobilization.
And we know those resources are available. I've got some numbers that I'd like to share with you. Kwame, do you see this happening? Because we've had this conversation about the AU being financed by donors for most of its operations. I don't know what the percentages are, but they are certainly very, very uncomfortable for a continent that is very sensitive about perceived interference in its affairs by the former colonial masters.
Okay. I think regional integration requires two things. One requires financial resources, the other requires intellectual resources, and all that. So the financial part we have to understand the low-income countries, so obviously the low-income have. So
no, but are you saying we don't have the money? We don't have the money to finance our own programs and drive our own agendas? Or is that a lack of political will on our part?
Okay, I think regional integration requires two things. One requires financial resources, the other requires intellectual resources and just all that. So the financial part, we have to understand we are low-income countries, so obviously there may be some help. And so using innovative mechanisms for funding it. If you're going to, as has been stated, Richard said, if it's going to take $100 billion, obviously that East African communities countries at today's income levels cannot afford. But the way to do it is innovative financing mechanisms, as we say. If you have a public-private partnership, you can issue some bonds for infrastructure and and to do that, perhaps an East African community integration bond is something to consider, because then you're buying into your future, but also signaling to people that we intend to stay together. That would be a good one. But there are most of what East Africa needs at this point actually are not money. It's just basically the decisions that are required to ensure that people can move, freedom can, there's economic freedom and people can actually invest and repatriate as is required, and they can move workers one way or the other in order to add value. Those ones are actually questions that would be done through simple law reforms, for instance, within individual countries to allow that to do. So there's a part that requires heavy financing, definitely, but the other parts are in my view, would be more important to also activate that financing, which is just basically making reforms on paper.
I want to tackle this issue of, and we're running out of time really, but really, he has raised a very interesting point there. Why can't we create an infrastructure, a bond that finances our own integration and drives our own agenda? Let me start with you and then come to you.
Well, there are all sorts of things happening
rather
on the
than
continent
texting us for flying.
To address that particular issue. For example, the African Development Bank have established the Africa 50 Fund,
yes,
which essentially encourages Africans through our central banks to contribute
invest in Africa's infrastructure development.
Yeah, exactly. So those are many. This is one of many other options. I mean, in Marrakesh during our 9th the African Development Forum on innovative financing, we looked at, for example, tapping into the old story of the remittance of the diaspora
from abroad.
We've also looked at tapping on our pension funds. So there are many ways that we have to look at. I mean, the private equity financing and so on and so forth. I think what is important is that we need to change a little bit of the paradigm.
Right.
If you look at our governments, they are preoccupied with providing an enabling environment to attract foreign direct investment.
Yeah.
And the terms and conditions that are offered to foreign direct investors are not exactly the same as those that are provided to domestic and regional investors. So regional integration should also be about providing those same terms and conditions to attract our own domestic resources. And earlier you were saying, I mean,
we're running out of time.
Kwame was saying that there is no money. There is a lot of money, I guess. I mean, what needs to happen is for that money to be channeled into productive investments. A lot of money goes into consumption. There are opportunities for us to invest into regional integration projects, energy and otherwise, if indeed the conditions are created.
100%. Your final thoughts?
My final thoughts, really, the EAC at this moment, we have the right protocols, we have the right policies, we have the right political will, abundant political will.
Yes.
We have decisions to implement. I think the next stage is fast-tracking implementation of all the commitments, of all the decisions, and making the EAC integration agenda a reality and making it make sense to citizens. And I think we're slowly getting there.
Yeah, I like the fact that we're quibbling about how we make this process faster, how we make it better, and I like the idea of a bond. I would buy into that bond to finance our own integration agenda. Unfortunately, we've run out of time, as I said, but of course this conversation is just beginning and we need to take it to other places. Let me thank my panelists for this discussion. Leonard Mungarulire, Regional Integration Advisor, Minister of East African Community here in Rwanda. Antonio Pedro, Country Director, United Economic Commission for Africa. And in Nairobi, we had Kwame Owino, CEO, Institute of Economic Affairs in Kenya. Thank you, gentlemen, for joining us today, and thank you for watching the program. If you've got ideas, of course, let's chat about them, and let's take this conversation about Africa's development forward.